Hi, welcome to another edition of 7 Market Movers. My name is Aya Yoshioka. I'm a Portfolio Consulting Director and Senior Investment Strategist here at Wealth Enhancement. Markets have been hit by so many headlines, so many surprises in 2025. We've dealt with surprises related to tariffs, immigration, debt downgrade, DeepSeek and AI, conflicts in the Middle East. Really, what haven't we dealt with so far in 2025? As I record this on Thursday, July 3rd, we had nice surprises this week on the labor front. And that began with the JOLTS report that we saw on Tuesday, which showed a higher than expected number of job openings. Job openings rose to 7.8 million, exceeding the estimate of 7.35 million, and the layoff rate remained low at 1%. We also got the non-farm payroll number, or the jobs report, this morning, and this showed a gain of 147,000 jobs and an unemployment rate that dipped back down to 4.1% versus the 4.2% that we saw last month. And every economist out there had estimated this was going to rise to 4.3% this month. We also got initial jobless claims, which are a nice timely number because they are weekly, and that came in below expectations as well. All of this data continues to corroborate our view that the labor market is characterized by this slow to hire, slow to fire backdrop, and that remains a positive for the overall economy because even as the economy moderates from a growth perspective, it's not collapsing. We also saw ISM survey data this week, and this is some of the soft data that was really driving sentiment earlier on. On Tuesday, we saw the ISM manufacturing number come in at 49, still in contraction territory, but it was higher than last month's 48.5, so a nice improvement. Additionally, we saw the ISM services number today, which rebounded to 50.8 versus last month's 49.9. And more importantly, the new orders component here rebounded to 51.3 versus last month's 46.4. Given the US economy is more of a service economy with 70% of the GDP tied to services, it was nice to see this rebound. But perhaps the biggest surprise of them all has been that we're now at record territory in equity markets. The S&P 500 has rallied over 25% from those April lows and is now up over 6.5% on a year-to-date basis. International and emerging market stocks have done even better on a year-to-date basis, with international stocks up almost 20% and emerging market stocks up over 15%. The bond market has also been whipsawed with all of this news. But the Bloomberg Ag Index is up 4% for the first half of 2025, and that's the best first half since 2020. After all of these surprises, the takeaway from the last few months has been that timeframes really do matter, and that these timeframes are what delineates the difference between investors and speculators. Investors take long-term perspectives, while speculators try to trade based on the news of the day. We know that volatility might creep up again as we go through the summer months, especially as so much good news has now been priced into markets and trading desks do thin out for those summer months. But we remain focused on the long term, and we hope you do too. As always, if you have any questions, please reach out to your financial advisor, and an investment team member will be happy to discuss markets with you. With that, thank you again for listening, and I hope you all have a wonderful 4th of July weekend. Happy 4th.